Meanwhile, Huawei sales were up 66%. Could this be a sign of a ho-hum holiday season for Apple? Well, joining us is analyst Amit Daryanani from Evercore ISI. Amit, it's great to have you back on, and I'm going to start right there. How much should we read into data from a third-party resource about China's Singles Day event?
Listen, it's a data point that certainly should be looked at, and I would say that the biggest worry on Apple stock from an investor base right now is what happens in China, especially with Huawei starting to do incrementally better, right? So I do think this is relevant to focus on. The one thing I would say is Huawei did have extremely aggressive promotions through the Singles Day in China. They're offering their version of AirPods for free with the 860 purchases, for example. Apple did not have any incremental aggressive discounting or promotions going on. So I wonder if that was an element at play as well. But certainly with Huawei having a product in market in China, there's some debate on what percent of the 35 million iPhone units, if you may, that Apple captured in China over the pandemic will start to reverse back to Huawei. So I do think there's a bit of a concern there. Certainly worth monitoring, but I do think the promotional activity by Huawei was a lot higher on Singles Day than by Apple.
And of course, the competitive landscape is very different in the U.S. with Apple versus in China. We don't have this smart device, this device from Huawei to contend with here. But how much, especially if Apple wasn't necessarily as promotional as its competitors, how much is that a harbinger of potential demand and activity we'll see for the company here this holiday season?
Yeah. So if you look at the U.S., right, I mean, well, actually, one thing I should say, and this is true across iPhone sales, ASPs, we think, with the iPhone 15 cycle versus 14, should be up about 3 points. So you do have a nice little ASP bump as you go forward. And to your point, in the U.S., I mean, demand is held up from what we can see, stable to maybe slightly better versus iPhone 14 cycle. So call it flat to up modestly, up low single-digit units in North America. And ASP is doing a little bit better than that, right? So 5-6% revenue growth for Apple in iPhones in North America. And to your point, if you look at the promotional activity through Black Friday, I think the best deals on Apple right now are really on the last gen phones, iPhone 14s. iPhone 15 seem to be holding up really, really well in price, and there's no real discounting across the different continents on the phone right now.
Okay. So what does this mean in terms of buying the stock right now? Is it still a buy, or do you wait for a more meaningful pullback?
I feel there's way too many people waiting on the sidelines for Apple to pull back for the last 3 years now. So I'm not sure if I would kind of sit and wait for that. My gut on Apple would be this, which is, listen, it's not about iPhone units as much as it used to be anymore. iPhone units will grow 2, 3, 4% maybe. It's really about how well can services do, which are going up double digits, mid-teens right now. How well can wearables penetration do? And gross margins keep going up, right? Our take is, listen, it's a 750 plus EPS story. This should be treated like a consumer staple stock, which means in the 30 times PE zone is fair, and the stock should work into the 210, 220 kind of price points. So at 190, we think it's a very attractive name to own over the long run for investors.
Okay. Now, if I go a little more broad with you here, for the sake of the holiday season, the fact that we are focused on where consumers are putting money to work right now, you do cover a number of names that are very involved in, for example, the PC market. Expectations for electronics, can we say that we have seen a bottom and signs of stabilization after the huge pull forward during the pandemic?
On PCs, I would say yes, you have, right? I almost want to say PCs might be following, FIFO from an accounting perspective, right? They were first into the correction of the post-pandemic, and they should be the ones that are first out. Channel inventory, the best we can see in PCs is fairly at the lower end of the ranges. So I do think, as you think about PC units, right, they used to be at 250 million units pre-pandemic. They went to 350 at the peak of the pandemic, and then you're back to 250. Our take, PCs will start to recover over the next 6 to 12 months. Consumers will obviously lead the way right now. But in the next 6-9 months, we think as Microsoft will end of life Windows 10, you should get a nice little enterprise upgrade cycle. I do think names like Dell, names like HP will benefit from a slow and steady PC recovery over the next 12 months.